Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's April 7th. This will be our chart lesson for today, and this will be our last chart lesson for the week. I'll be taking off tomorrow, and um, so we'll get through this one and move along. Start my weekend a little early. Probably come in the morning and trade a little bit, but I usually on Fridays I try to leave early. Uh, but you can see it was all downhill. Backed out a little too quick there. Uh, Early on, I was looking at this two-tiered channel down, but it looks like this is a spiking channel, and really you couldn't really find this upper line until you kind of had this going down through here, and then if you just kind of drew that, you actually could have drawn it off those two swings, and maybe when it started bouncing there had a clue, but drag it up. But originally I drug it up to here, and who's to say that that's, I'm not going to say that that's wrong, but I believe it's up here because the midline fits better by bringing it up there. So if your midline doesn't fit correctly, then that sometimes helps you. And you can see this midline working on both sides all the way down. It's acting as support and resistance. So I believe this to be it. But this wasn't easy to find off the top, and it only really came back into play here. And you got a little trend line working up with no break yet. So, but you end up getting a really nice setup right here that just the bottom falls out of it, and you can ride a runner, on that kind of thing. And there was another. If you just caught two trades today, here and here, that's all you needed. Uh, but those were two really nice trades. But let me back out a little bit, get through the trades. I'm doing this a little early today. I've got 15 or 20 minutes to get through this, and I got to get out of here. So I'm going to try to get it done without going too fast, but at the same time, I'm not going to dilly-dally around today. So, but anyway, we're working down in this two-tiered channel here. We make a big move down. This one really should have been green right here. Forgot to change it. But I liked it because it broke higher, and there's some resistance. I don't really have the line on there, but it's a failed break higher, as you can kind of see right there. And then it couldn't even get back to that line. It is the first break of this trend line, and it's only a second entry. But notice there's a double top here. Notice this is a new high, so it's a pullback first entry, pullback second entry, and it's a higher low. But look how everything's below the EMA. So it's really a failed second entry long, and that's why I liked it. But the better trade was to wait till you got this second entry long counting off the double top, the new high, because that's more recent. And then you notice how the bottom falls on out. Then more people realize now, hey, we're going lower again. Because we weren't back to the key entry point. So this first one's a little aggressive. Second one's a perfect setup. And it was a quick, easy move. Then we bounced. When we fell below that double bottom, we bounced. We get a break, a move to a new high, and it's basically a double top, but it does make a new high. And look at that little bearish bar right there. Just go short right there. Um, it's really a double test of this spot. It's a triple top right across there. And it's the first break of the main trend line, and off it goes. And if you had a good setup here, it's not really a good setup, but notice that trend line working up and no break until here. So that's why you don't really get a setup off here. I guess if you were using this bar right here, you did get a break below it. But hopefully you can understand why you don't take that short, because you got that trend line working up. And we don't have a break. Notice we get a break, a new high, and then the bottom falls off of it. So now you're looking for a retest of the low. So we didn't quite get one here, but you can see that resistance across there. We're kind of going sideways, and if you drop that down, it's a perfect double bottom. It looks like a trading range. We do get a close outside, and we tried to go lower twice and then bounced right off that support. It's not a great setup. We didn't quite get a new low, but we're probably going back to the EMA here, and there's enough room to get out before you get there. And that was a quick scalp, and then it turns down. It fails, it comes back, and then you get a second entry short. It's not really a failure, but you could treat it like one because we should have continued on lower and probably made a new low there, but we bounced. And if you move that line up to those last closes, notice where we bounced. That's a huge bullish bar, but notice this little channel working up, and you're looking for a move to a new high. You figure prices will come to here, and we may keep going and go, make a new high or back up to this high over here or whatever. But anyway, it's a failed break higher. You got your break, 2 legs up to a new high, and you get your failed break. This bar is too bullish, so you could use this one, but let it break below that and drop your limit order back where it would have been 1 tick below that bar and see if you get filled, and you would have, and then the bottom falls out of it. Great trade. I almost wouldn't have a problem putting a stop there, but because there's a couple of ticks there and it closed above that line, it's a little bit aggressive if you do it that way. But if you just wait on it to break below this bar and then put your limit order back where it's supposed to be, it would have backed up and filled you, and then the bottom just fell out. And that's a great trade. There's no other way to get in this one again. This is a first entry, and this is just kind of going sideways. It does give you your break and a new low, and then we just start going sideways again. It's almost like it's basically a repeat pattern of this pattern back here, but it's just a little smaller version of it. And notice what happens. You're just going sideways. But notice you got a new low, pull back first entry, pull back second entry. That's a big bearish second entry. It's really close to being here, so I'm a little hesitant to drop a stop there again. But what I like is letting it break lower and then drop a limit order a tick or two back just to make sure you got enough room to get out before this low. It doesn't matter, it goes on down anyway, but you got to be careful. So you could have got in that one with just a regular sell stop, but it's a little iffy going short that close to the low. So just sit, if you entered it with a stop, it needs to be green because it's a little aggressive. So, and then of course we bounce off that low again. And notice how we break higher and you get that second entry short again. And failed second entry long, counting off the low. It's actually a new high, so it's just a first entry counting off the high, but going the normal way. But if you're counting off the low, it's a second entry short. And you've been working down, so you're better off working off the lows anyway. It's not a perfect signal bar again, but it's a failed break higher, and I like that one. Again, I like letting it break lower and then dropping a limit order in a couple of ticks back, and it would have come back and filled you here. But I'm almost okay with you putting a stop right there. But then it pulls back again, and it turns up and then turns right back down. Look how bearish that is. Just put a stop right there, and if you're still in this trade, I'm okay with you adding on right there. This is an add-on type if you didn't already get out. If you already got out, it's just another trade. And again, the bottom drops out just like it did over here. This is just a smaller version of this whole thing over here. It's a repeat pattern. And at this point, you're better off to play this shorter term channel. Originally, I played it, a little higher here, like so. But when we kept going lower, I just adjusted a little bit. I think it fits better there. Actually, I adjusted it on down below that last close, and notice how it plays perfectly almost there. But this is just a little channel working down within the bigger channel, and generally they work better. But notice how we're almost going sideways now. We're not really dropping as low, and we're swinging back and forth above the EMA. That's the only reason I like this one long in here. I thought maybe we might reverse, but we didn't. Notice you made a double bottom, I'm sorry. And you got a trend line working up. You finally get a close outside. You got what looks to be a close outside right there, but it's so close that I'd wait. And notice you get a clear close outside here and a failed second entry short. Just go long. You may turn down right here, but there's enough room to get out before you get back, and it actually goes a little higher. And then this is a perfect reversal pattern here. That's your first break of this channel working lower. So we're probably going to try to make a new low, and look what happens. It takes off. It kind of pushes through the EMA, pulls back, pushes through for sure, pulls back, tests it, gets the third confirmation of that trend line. Look how bearish that bar is. Just goes short right there, and it's just really quick and easy. They trapped a bunch of people there trying to get long. Um, that's why I like scalping out, because if you try to do anything more than a scalp, you get trapped there. And we weren't expecting this to go anywhere but to here and if it goes any higher, that's just gravy basically. And we keep working down. Um, I don't like doing anything right in here. Uh, there's a setup here right off that trend line, but it's the first entry, and we're more going sideways than anything, so I don't like it. And look, I think it would have worked, but it's real close, and then it bounces. There's a second entry short right there, but we're just going sideways there. And so, it's a really big bar, and really this is your signal bar, not this one. So by the time this one finishes, I'd just stay out of that one. And we do have the break in the new low as well of the bigger channel here. So you got to be real careful getting short down here now, especially with it going sideways like this. And it does bounce. And look, you can see that trend line working higher. We get a break. We get a first entry long, pull back, second entry long. It instantly fails and confirms that trend line and gives you another big bearish bar just like right here. And this is just a repeat pattern, a bigger pattern of all this over here. And look at that thing go. If you caught that one trade, just assuming you're not going to get it all. First bar that breaks higher after a break there's 9 points right there on one trade, on one contract. And then of course you get your break of this little two-tier. This is a two-tier channel, so this should be a little lighter, just indicating that it's a midline. And we bounce, but you can't be going long here after a big move like that, because you're going to retest that low for sure, and you might even make another leg down. This might be one big half of a bigger two-tiered channel, and I don't really see a way to get in there. But look what happens when it pushes through that trend line. It pulls back and tests it and gives you a big bearish reversal bar. Notice how it shot right through. That's your reversal pattern going back short again. And I like going short there. You got enough room to get out, and it's a quick, easy move. And that pretty much does it for today, for the day. But yeah, it was all downhill today. There were a couple of longs in here, maybe one aggressive long. But this was a nice trading day. And you really didn't need to see the bigger two-tier channel at all. If you just played these shorter-term two-tier channel, shorter-term range, shorter-term trend line, shorter-term channel, shorter-term channel. If you just played those, it was pretty easy. It was fairly easy. And but you got to be able to find these lines. You got to know that you're getting them right, and you got to understand what's going, and follow the rules and understand the rules. If you do that, it's not too difficult. I did want to share one email I got today. I hate to share this one, but I always share the positive stuff. And so I thought I would share this one because I know how this gentleman feels. I've been there before. You think you've got it, and all of a sudden you have a bad day. And, I don't know if he just had a blowout day, or he just slowly lost every day. But I did go back and look, and he started studying the manual in December of 15. So that's January, February. It was about the middle of December. So January, February, March. So he's barely been at this 90 days. And, I tell people over and over and over, and that's the reason I'm going to share his email, because I want people to hear this message. You can't learn this in 90 days. You cannot. I don't care if you're the highest IQ in the entire world. You can't learn this in 90 days. It's impossible. If you think it is, you're just fooling yourself, and you're going to be a donator. Don't be a donator. This takes a long time to learn. Now, you might be able to learn all the rules and learn the the basic logistics of what we do in 90 days, but then you need at least a year's experience at the screen doing it to put it all together. So I don't care how smart you are, you can't do this in 90. And I'm not speaking directly to this gentleman, I'm speaking to everybody else out there that thinks they're going to be different than the average person or even an above average person. So, but he sends me his email. He says, "Hi, I'm done. Lost too much. Can't seem to get a hang of it. Thanks for all your help, and I wish you great success. Have a great day, sir." And he gives me his name. So, I'm just going to tell you, I feel for him. I've been there. I know that feeling, but if he sleeps on it and he listens to me, and I wrote back to him and says, "Hey, don't give up. Quit trying to trade with your real money. Get on the simulator and don't be a donator, because that's what you're going to be if you try to do this too early." And I just hate to see people think they can do this against professional traders that have got years and years of experience. If this was easy, trust me, everybody would do it. It's not really that hard, but it just takes time. Once you get it, it's not that difficult, but it's very, very difficult getting there. It's a long journey. And again, I feel for this gentleman. I know how he feels, and that's the only reason I share this, because I want to try to save somebody else from that email, because I'll see that email again. I see it, quite often. And, people the light will go off a little bit, and they'll grasp something and think, "I got this." I got another trader. He sends me stuff every day, and he's I'm not going to call his name, but he knows who he is. He gets so overconfident and thinks he's got it. And I tell him, don't be too eager to go live, because I know he hadn't been doing it that long. And even though he's 100, he's probably 500% better than he was when he started. He still doesn't have it. He doesn't have enough experience, and he thinks he does. And he gets mad when I tell him, don't be so eager to go live. But every time I tell him that, and every time he'll send me a couple of emails, say, had a good day, and then all of a sudden I blew my account. Well, he wasn't ready. At the worst, he should come back and say, "Hey, I had a bunch of losing trades in a row," but you should never blow your account. If you follow the rules, you'll never blow your account. And that's the key. And that's what happens to most people. They move their stop, they don't follow the rules, and they blow their account out. And then they're broke, and they lose it all in one or two trades. Where if they just kept pecking away, even if they were live, they probably would have survived. But people, you can't do it. I don't know. Don't ask me why. It's a mental thing. I've done the same thing. So I know that feeling. I've been there. I've done that. And I don't ever want to be there again. And so anyway, I wanted to share that with you. I don't have any more time. I'm going to wrap it up today. But I'll tell that gentleman, hang in there. Get you a sim account if you really want to do this. And in a year or so, after you've simmed and traded and studied your chart every day for a year or so, really, you shouldn't try to go live until you can start a sim account, clear it out, put your starting capital of $5,000 or $10,000 in there, and when you can double that, following the rules and not doing crazy things, not lying to yourself, and you can double that account, then you're probably ready to put your toes in the water. And then you probably just need to trade one contract for a few days and scalp out on every trade just to get the feel, make sure you don't lose a lot of money, and just get used to that feeling of having real money and real skin in the game, and then build on that. And that's how you got to do it. You can't jump in here and think you can do this in 90 days, 6 months, and probably not even a year. And if you can't dedicate more time than that, this is not the business for you. Don't even waste your time unless you want to be a donator. We need donators, because if there's not donators, we don't, nobody makes any money. So there has to be a donator. I just hate to see people, that I tell that don't want to listen because they don't want to hear it. So I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com. We'll be back again to do it Monday. But I'm out here for today, and we'll see you next time.